One other narrative that's emerging and will be emerging in the media very shortly, we've seen some of this here in the first few days of May, is high-profile bankruptcies. We're starting to see a lot of big-name retailers going bankrupt or filing for bankruptcy. We also know there's a lot of companies that probably are already investigating the possibility of claiming bankruptcy. Can you walk us through that impact and how we should think about that going forward?
Yeah, it's going to be, as you said, pretty high profile. I mean, when we're finally able to go back to the mall, it's estimated that about 50% of mall retailers will be bankrupt at that point. And we've already seen the names like J. Crew, Neiman Marcus, Lord & Taylor, True Religion Jeans. A lot of these may be more 90s focused, but names like Papyrus, a huge number of retailers going bankrupt. And we think that's probably just the tip of the iceberg. You're definitely seeing what's happened is a lot of this stimulus, especially the monetary stimulus, has favored a lot of larger companies that have very easy access to capital. And smaller companies that with less secure balance sheets that can't get access to a lot of this capital, they're going to perform worse and worse. So a big divide is happening, and we think you still have a number of bankruptcies that have to occur in the shale industry, in oil shale, and then more and more on the consumer discretionary side as well.
And there's even talk about some retailers and some high-profile name retailers that are even in such bad shape that they won't even be able to go through bankruptcy. They'll just have to liquidate upon reopening here. So that will be the cause of a lot of headlines and a lot of permanent job losses, I would suspect.
On the good side of the equation, if you are a beneficiary of some of these programs, meaning you came into this crisis and you had an investment grade credit rating and you're a corporation, that's going to be great for you. Those are generally larger companies. So those large companies are going to do very well. If you're not eligible for some of these programs, you were a below investment grade company before the COVID-19 lockdown happened, or you get a lot of your financing in other ways, you don't have access to public equity markets, this isn't going to benefit you very much. And a lot of these companies, as we've seen with this sort of tip of the iceberg on bankruptcies, they can't deal with 1 month's loss of revenue. They certainly can't deal with 3, 4, 5, 6 months of lost revenue. So you're going to continue to see a bigger divergence between sort of the haves and the have-nots. The larger companies that can benefit and are eligible for these programs, and the smaller companies that unfortunately are not.
And balance sheet strength is obviously key to success in making it through a crisis like this. So in addition, companies that have better balance sheets and will have better access to capital and will have a higher probability of excelling as we come out of this, right?
Yep.